Hello out there and good morning, traders. Welcome to the Apteros Daily Market Insight. It is February 21st, 2024. Let's get into our recap and then we'll update our levels for the session plan today. So, taking a look at what was going on yesterday, we had a dissonant type of narrative. We were looking at higher time frames against higher time frames, and we're kind of stuck in between those two areas. And that was kind of the overall context what was happening with us in yesterday's DMI. Now, what we ended up seeing was kind of exactly what we were planning or looking for. We had more confluence to the bearish side of things, especially early in the session, and the opening drive kind of came out of the ES and pushed us straight down into that bullish zone. From there, we started to see the bulls participate in this market again. So we started to see these lows hold, continue to rotate back up. We don't really get back up into our first neutral destination throughout the entire session. But this is kind of the problem with the bigger time frame dissonance, is that it's creating a little bit more of a compressed situation for us in terms of rhythm. So a lot of good MFE coming out of the bull area, especially on decent inflections, just lows holding in specific areas, especially here, which basically was the low of day. And, it releases a good, 20 points or so. And same thing here, same thing here. So we had decent MFE out of all of our bullish ideas coming into this lower bullish line in the sand. So somewhere like here, somewhere in here, and somewhere in here were all bullish opportunities. None of them, though, going up to the target. That is something that you have to pay attention to, because if you're seeing ideas in context and you're seeing these lines in the sand, if they're not completing their ideas into target areas, then you have to start thinking, well, what kind of pressure's on the other side of the market? How much longer can we remain around the line in the sand and it still be valid? As a line in the sand is continually tested, it gets weaker and weaker and weaker. And that's going to be a theme that we're going to talk about a little bit in today's DMI. So let's update our levels and session plan for today. Okay, so for today, we find ourselves in a very similar situation that we did yesterday. We have this higher time frame dissonance that's fighting back and forth. But today we have a little bit more clarity as to what's going on. Basically, right in the center of this particular bullish zone is some lower time frame information that we can use to kind of gauge what's happening in this market. So for right now, our main list is this bullish area, but the center of this bullish area really is where we're going to pay attention to for the session. If we break down and hold below, then we're going to look for a continuation down to this overall destination. If we break up and hold to the upside, we're going to be looking for a move up to this overall destination. We do have some minor references along the way that we can use for inflections and scaling, and that would be kind of a good guide for us in the overall context of this market. So with our list right now, let me erase this real quick. Let me erase this stuff and this stuff. Okay, so with our list right now, the way it is shaking out is we are currently still bullish on the acceptance picture. So scenario one is that we hold this area and we rotate up at least to this first inflection, then possibly up to the second inflection. That would be scenarios one. Now, scenario two is that we actually break down below this area and we end up seeing a move into this neutral reference and then a continuation down to this neutral reference. And that would be kind of how I would shake out the main ideas for the session today. Now, one of the problems with this bullish line in the sand is something that we measure in the NADRA community called recency. Recency is an issue in here because the longer we hang around this line in the sand, the more pressure it comes under from our higher time frame, right? So our higher time frame ideas are now fighting back and forth, and this is a higher time frame going up. This is a higher time frame going down. The longer we stick around this area without a reaction, without the bulls taking control, the weaker and weaker and weaker this line in the sand gets. So that's just a little note on today. So right now, as you're looking at this, the current scenario, scenario one, is under pressure, right? Because of the recency of this area and what's happening in it. Now, it's under pressure. It's not accepted to the downside yet. Like I said, we're kind of focusing on the middle of this line in the sand for that. If we get down below here and then we start to come back to test, that would be where we'd be looking for scenario two and then a continuation to the downside. So that's the overall plan for today. That's the overall idea. We are still in a dissonant market right now. Clarity will come if this bullish zone really breaks down today and we start to see it, this market flush to the downside. And we do have some stretch targets out there, right, to the downside. So if we do end up seeing some kind of, really, really down move, we want to get at least to here. If we do hold below that, we have some references down below to also continue with if we end up seeing a high energy, like kind of trending day. So that's just an alternate there for you, little bonus in case that does happen. All right. So hopefully this plan sets you up for success today. Let's have a great trading day, and let's mind our risk and mind our process and keep the things that we can control in their proper place.